going on, everyone? Welcome in, welcome in. It's Monday. What's going on, Ian? Welcome in. Just about 2 or 3 minutes. Let everyone trickle in real quick. And then I'll pretty much get started. What I'm looking at, we'll see if hopefully by the time I finish what I'm going over, if I can take some ticker requests real quick. But just a sec. Let me also take a look at something real quick. Let's see. All right. Okay, that's expected. No surprise. Let's see something. Dun, dun, dun. Let me see. Welcome in, guys. I'm about to start here in just a quick second. All right. I'll get started here. I know that some more viewers will probably just trickle in here just shortly. But pretty much just want to get started here. So hopefully we can. I'm actually gonna go over Facebook. Pretty much what I wanted to do today was, considering the downfall that we have in the market right now, was pretty much just go over a lot of the names that were pretty much in the queues itself. Basically your Fang, if you want to call them your main names, basically. Gadsden's calling for 400 tomorrow. Honestly, at this rate, I would not be surprised if we actually hit 400. I think that it's more than likely a done deal that we're getting to 400. My only trepidation about the 400 tomorrow will be whether they want to save that for the Feds, or if they're really just going to nosedive us right into the Feds, and then we get the bounce pretty much coming out of whatever the Fed's going to be saying on Wednesday. So a little bit more of a flip of a coin to me, more so. But obviously the trend pretty much coincides with SPY leading towards that 400 mark. So pretty much what I was watching. But as I pretty much get into that, looking at the daily on my SPY chart, we pretty much had the body of the candle close here today. 416 was that mark, close enough to 417. We got pretty much right around that level. And as you see, you're pretty much flirting with that low that you set from end of October, February. Oh, why did I say October? The end of February, February 24th, in which you're going to be sitting at 400. The other level below that I was watching was 397. That was the next level I was watching on SPY. We'll see if we approach that level. I'll probably reevaluate tomorrow, and we'll be able to look to see if we're gonna get close enough below 400 to that 397 mark, and we'll see what the pressure is looking like in terms of the selling. All right. But those are pretty much the levels. Otherwise, we get a bounce. I mean, it's gonna be very minimal. I don't even think we're gonna be able to breach 419 as a bounce overnight here tomorrow, just because of the fact of how weak it was. But that's ideally the spot in which I'm looking at, is 419, close enough to 420. It's going to be very bare minimum, and I'm hoping that they don't do it just pre-market. Maybe we get some kind of action here into the morning hours at open, and then we're able to get a nice entry into the shorts at the open, rather than just getting that quick fade, kind of like what Apple did with this morning. And that's what actually was a little bit more concerning with me, right? As I'm about to get into Apple, though, Apple pretty much dropped pre-market, and what I didn't like is that they dropped it so early, so quick. It was already down about $3, about within 30 minutes before open. And I'm like, all right, they just flushed us a little too quick that we're likely going to get a rebound at open. So nonetheless, the market tried to give us a little bit of a push, and we just nosedived right off of it. So it was a nice little rebound action. So you still had an opportunity to get into the Apple puts, but I was expecting that little bit of a bounce at the open. I was like, hopefully we get the bounce before they flush us entirely on Apple, but they just sent it red right into the get-go before the open, and that's what I didn't like about it. So I was hoping to play Apple puts pretty much off the bat, and hopefully to get in around that 154, 155, close enough to that mark, but they just nosedived it, and that was pretty much the wrap of that, right? But as I pretty much get into Apple, because that was pretty much ideally what was my leading indicator so far for this market. And those of you that pretty much follow me on YouTube Live here, you probably heard me mentioning, I want to say about for maybe 2 weeks straight, just not that long ago, I want to say a few days ago, I was mentioning to keep an eye on three names: Apple, Tesla, and Microsoft. Those are the three names that were pretty much just lagging behind this entire waterfall. And now we pretty much got two of those three names that are just nosediving right now off of this, right? Microsoft pretty much held up for most of the morning. We saw it take a nosedive into the close. But Apple and Tesla is really pretty much carrying this weight to the downside as well. And we could also, I can't even dismiss Amazon and Google for that matter because we obviously see them both down 70 something dollars, but we seen them be pretty much vulnerable to this downside price action. We haven't seen Apple be as vulnerable concerning the fact that now it's actually breached this 200-day moving average, and also Tesla. So that's what was my leading indicator. I knew that once Apple really started to roll over, that we were going to see Microsoft or Tesla really start to follow suit. And that's basically what happened. And I knew that the pretty much the casualties will be Facebook, Netflix, Amazon, and Google pretty much following suit. And that's exactly what's happened so far. All right. But as I watched Apple, pretty much if I give you where our 200-day moving averages, you see we pretty much broke that 153.68 level, more so or less 153.74 to be exact. That was the level that I was watching here this morning. I was hoping to get in above it, and I wasn't able to get in above that 200-day moving average. And you see we pretty much nosedive, right? Now, as I pretty much look at the level in which, as this market volatility just continues to just keep pressing to the downside, the level that I'm watching in terms of this is where we had prior support back from July of 2021 towards the end of August 2021. Right around there, you see on this green line, as I try to expand it as much as I can here, you see that was acting as potential support along that consolidation that we had from those few months there between that July to August. Those, but it's about 3 months there that you're looking at. And then the other factor is that it also acted as resistance here between September towards October before we had that massive breakout. So this level is pretty much sitting at just about 145 is what I'm looking at. And that's the level I'm looking to retrace down towards as this volatility continues. So you're looking about another close enough to about a $6 move from where we're sitting at right now after hours. 150.76, and we're going to be pretty much pushing pressure towards 145. That's what I'm expecting right now. I actually expect that to actually reach 145 here by the end of the week. And that pretty much coincides with what basically Gaston was saying. SPY 400. If SPY is really going to 400, and that's going to be about another $17 move to the downside here on SPY, I would expect Apple to really take a quick beating on this, and it's going to follow suit. We could even see it stretch down, maybe wick down towards about 142 or so. But that 145, if I'm really looking to, as pertaining to what contracts I wanted to play, then I would play safe and look towards that 145, and that would be the mark in which I would look to trade off of. All right. So that's pretty much the first one I wanted to pretty much show everyone. Obviously, as far as the bounce, I think as far as you can bounce here, it's about a dollar or two. The weakness is clearly present, and I would expect if we do get that dollar to $2 move to the upside here, it's rather going to be overnight here. So I would not look to be playing the upside as well. That's just something I just want to point out as well, because I knew that once Apple showed its weakness, it was going to progress its weakness, and you're going to just see literally just dead cats. So the upside is very minimal, is what I basically want to emphasize off of that. All right. The other name that caught my attention was also Facebook. Facebook was another one. It actually did not do as much damage as I expected today, only down just barely under about a dollar here, and not too surprising just because of the fact that we saw Netflix and Facebook take that heat early on, not just within these past few days or week or so. And so looking at pretty much the level that I want to see where it ultimately ends up as the volatility continues again is looking out towards as early as July 2017, in which this level acted as resistance. We see that we had a little bit of a distribution around the pretty much sitting towards August of 2018. And then we had resistance also towards March of 2019. We can go on and on. It also acted as support September 2019. And then we pretty much V-shaped recovery and we broke right out of that level. And that's currently sitting at 170, 174 is closer to that mark of what I'm looking at. So you're looking about a potential $13 move from current levels here. 187 down to 174 is what I'm looking at in terms of Facebook. And that's pretty much your downside potential and what you want. If you're looking to play the downside and you're looking to give yourself time and what pretty much what price point you're looking at, 174 is that mark in which I'm looking at off of the weekly here. All right. So hopefully that gives you a better idea of where you're pretty much retracing, where you're potentially gonna hopefully find bottom. That's the level in which I'm looking to potentially find bottom is 174 on Facebook. All right. Moving on, the other one was Netflix. This one has just been just a beating. I know Sig was on top of it all day on Friday. it just nosedive. We see the selling pressure just continue again today, down another near 3%. And so looking at this one, I think we're getting closer to a bottom here, just like Facebook, because I mentioned that Facebook and Netflix pretty much sold off early on. These two might be the first ones to find the bottom here. Looking previously, you see you pretty much had confluence here right around April of 2018. You acted as intermediate support around August 2018. You also acted as resistance August 2019 and towards the end of December 2019 as well. And so sitting at that level, I can see us retrace down towards 312, 313. That's the mark in which I'm looking at. 312, 313, and you're currently sitting roughly around 332. All right. So that will be the level in which I ideally look to see if we can find a bottom near to. Otherwise, you see a little bit of a dip underneath and then you curl back up. So how I would play this, especially those of you that are looking for long term, maybe that's another point that I can go towards, is that if you're looking to play long term, you look to scale in at a point of this emphasis right here, in which I say is that your ideal spot, that 312, 313. If you dip underneath, then you look to pretty much add into your position. And that's pretty much the emphasis of scaling into a position. You get in at your initial price point that you expect, and if it dips below, then you pretty much just add into it. All right. So if you get this down towards 312, 313, I think that's a spot in which you potentially look to scale in, and then you add underneath in which you could potentially stretch down. I think you could stretch down towards about 283, but that all depends how much that volatility really starts to escalate beyond this point. All right. Other ones pretty much sitting. We have our last two names in which we pretty much have the news around, in which I'm a little bit more skeptic towards Amazon and Google. These two names pretty much are a little bit more skeptic, but I would expect to pretty much retest this low that we have from March 7th of this month, in which we pretty much sat down towards 3671. That also sits at your 1 month low basically. So I'm gonna look to see if we end up retesting that level of that 2671. We retest that level and then hopefully we can just trade within a range, as we see Amazon has done for quite some time already. So that being the bottom, I would expect 2671 to hold. Otherwise, if we can't hold that, then we have pretty much quite a long way down in which we could stretch. I think the absolute bottom I would be looking at is 2050. It's just that I don't see it stretching down towards that low 2000 mark. And primarily because of the fact that, yes, you do have the split information, right? The only other intermediate level in which I can see some confluence here in terms of a support is right around this 24 half mark. 24.45 to 24.50 is where I'm looking at in terms of if the volatility really starts to stretch, right? And that's where you pretty much see me pretty much repeat, is that it depends how much the volatility pretty much extends itself. And that's 20 around that 2400, mid 2400 is what I would be looking at if this does stretch below 2671. If we can't find 2671 as support, yes, you're looking at the mid 2400s, and that's not going to be a pretty sight. And I know a lot of traders have actually loaded up, granted the fact of the post split news, and a lot of them are actually taking quite a beating so far right now. So don't be so quick to try and jump the gun, especially when you hear those kind of news, and especially where this market was currently sitting. That was the more ideal thing in which you really wanted to understand, is that you are pretty much bracing yourself for market volatility, in the sense that thinking that the news was pretty much going to trump whatever market volatility we had, and that just wasn't the case for a lot of traders. All right. So quick last one here was also Google. This is another one that I was pretty much sitting on. Is also looking at the weekly trend line resistance, now support, that you can basically say. You had this acting as resistance dating back towards 2019 here, right? You hit your head on resistance, resistance, resistance. You finally broke out, had that nice little bull flag action there from March from 2021. And now you're actually using this as a trend line support now. So I'm expecting this to hold right around this 2500 mark. That's also your 1 month low here. Otherwise, the only thing I don't like about Google here in this sense is that you do have a nice little gap fill here as well down towards the bottom, in which that's not going to be pretty if you end up having to fill that gap fill. And that's currently sitting right around 21, right around the 2140 mark is where you're looking at for that potential gap fill. That's about a near 300 some change dollar move to the downside, about 340, 350 to the downside. So I don't particularly like that. I would hope that we can end up holding this 2500 mark and we get a rebound. But granted the fact that the SPY is going to go to 400, and that we're anticipating that, then that's my fear right now is this gap fill towards the downside here, towards that mid 2100 mark. So that's something to keep an eye on. Obviously, this is a key spot. I would look to see if we get a bounce off of this tomorrow in particular, just because of the fact that we pretty much bounced our head right off of that 2500 mark. So I would look for that tomorrow. That may be one in which you want to pretty much turn your attention to. Is and so as we approach more closer to this one as a stock split and just being a trendline support now, that's why it does have my attention. It just looks like the spot is just a lot more in terms of panic. I would see buyers trying to step in to defend this trendline support here. All right. But hopefully those in the queues pretty much helped. I don't know if I think Tesla was the last one I didn't go through. Uh, that was I was pretty much saving that basically for the last. But overall, pretty much retracing back here towards where we ended up peaking on December 14th, and this is pretty much right around that 695, 697 level. In which what we're basically gonna do is put in one more low than what we had from February 22nd, and that's going to likely put you right around that 697 level is what I would anticipate in the short term. Does that mean that that's going to be the absolute bottom? I don't think so, right? But 697 is where I would ultimately look to be a buyer. Otherwise, right now, in terms of Tesla, I'm looking to short every bounce, every rip that you have off of Tesla, right? If I pretty much dial in towards the 5 minute chart, and this is pretty much what I do is basically a little descending channel action, which dates back towards, what is this, March 9th is what I have it dated back towards. And you pretty much see you have basically your defined little support levels. You smack your head on support March 9th, also March 10th, and then you pretty much hit that support level yet again here today. All right. Defines resistance in which you pretty much see that you have your resistance level that you smack your head on into the end of the day here as well. And that's what I'm looking. If personally, I would say that this is ideally a short right here. I know that Sig was talking about it towards the end of the day here. I think maybe when market closed, I heard him talking about it, in which he does see another leg down on Tesla. The other thing that I wanted to highlight off of this, and pretty much what I wanted to zoom is, if you actually see the volume profile that I pretty much have set for today's price action, right? So I pretty much, this is where you have the tools that TradingView actually gives you, in which you could put a fixed range volume profile. I put it from the beginning of today's price action towards the end. And looking at the volume profile in which I'm seeing right now, it's pretty much looking like a B-shaped profile. And you could pretty much Google that if you want. It's a B-shaped profile in which you get a double distribution, in which pretty much you see selling in two different levels, right? You saw 11, pretty much you saw selling when you see this little high volume shelf right here at the top. It's a little bit faded, and then you also see pretty much sellers trying to step in here, which is not confirmed yet until tomorrow morning, in which you're likely going to end up seeing a possible gap down. But that's basically what it is. It's usually a double distribution, and which is usually the strongest type of distribution. And that's why we saw that selling pressure rather early on into the day. And we also had Avery's algo alert also trigger a $15 move to the downside here today as well. So I would expect that this is pretty much going to act as resistance right here into the close, where we see this wick on the 5 minute here. And then we'll likely see a nice little gap down tomorrow, maybe some rebound action in towards the end of the day, in which we'll see that selling pressure likely continue. All right. So that's what I would anticipate. But again, larger scale, and that's pretty much what the purpose was of my live today, was pretty much trying to give you guys better ideas of where you're looking at in terms of key levels on a larger scale as the volatility pretty much continues. If you're not sure pretty much where you think a stock is going, or maybe how far you should go out on your strikes, your expirations, this hopefully gives you a better idea of what those levels are that you're watching in terms of playing the downside as we continue with this volatility. All right. But other than that, I think hopefully that actually helps in which I was looking at. Um, Kimondio, I'm sorry if I actually butchered the name. I actually saw Williams Sonoma actually up today. I think it was up about $7 or $8 today, and I was actually scratching my head until I actually realized that. I want to say this kind of looks like an inverted head and shoulders. It's just rather very weak, and the fact that this looks more so like a pennant here off of this right shoulder, it leads me to say that this is likely going to be rather bearish. So I'm a little bit more skeptic on this one. If I had to pinpoint pretty much a rather important level per se, I think you're probably flirting right around this range right here. I think you're likely coming down towards this range in which That was a prior resistance that you peaked at in terms of November. And then this also acted as support here into that 120 mark as support for quite a while in March before you ended up having that strong gap up. So I'm inclined to say that you're coming down in this range between 120 to 115 is what you're looking at in terms of that range. That's what I'm inclined to say right now. And just because of the fact that usually, and I think Avery has mentioned this in his thread as well, usually when you have a pennant off to the right in which it looks like an inverted head and shoulders action, it's usually rather weak and it's usually a fake out. So just be cautious about that. And the fact that you even said earnings, obviously you want to be cautious because it is earnings. All right. Um, Baba, Baba was actually one of my actual newsletter plays. I don't know why I was about to write earnings when I'm looking for Baba. Baba was one of the earnings plays if I pretty much highlight the chart here, and this is the only reason I actually looked at Baba, because I think those of you have requested me to look at Baba on YouTube here. I usually pretty much say that it's a very well defined downtrend and I usually stay away. But the fact that you're pretty much sitting and smacking your head on a very key support before, I want to say even before today, on Friday rather, on Friday's close, you pretty much smacked your head right on this 86 mark. And what you see is acted as support pretty much since your IPO basically, acted as resistance from November of 2015. That's how far back I went. Support acted as December in 2016, and you pretty much smacked your head right on that 86 level. Once I saw a gap down, that pretty much took everything off the cards, and I didn't want to end up having anyone forced into that position. So I didn't alert it off of the newsletter just because of the fact that it gapped down so much. I wasn't expecting that much of a gap down. I was hoping that we could probably play it off of maybe this resistance level that you have right around that 84, but it gapped down pretty darn heavy. So hopefully someone got into those on puts from last week, and I knew that it was going to end up likely crossing down. I just did not expect it to get down below 84 and gap down so hard. But I think this is going to see some more continued pressure. So honestly, if you're looking at that at Baba, I would pretty much stay away, or you try to force the downside and short any particular bounce. That's the only way I would look to play Baba. I'm not looking for the risk reward to the upside here just yet. I think there's just too much news, too much headlines going around with Baba, um, and not necessarily Baba, but China itself, pretty much, and now involved in this whole Russia-Ukraine story that's going on. So I would stay clear for the upside. If you're trying to short it, wait for a bounce. Maybe wait to see if you get a gap fill or if you test a gap, and then play the downside off of that. All right, that would be my best scenario for you. All right. Someone also mentioned to look at shop. Let me see if I can take a peep at shop. This thing is just a waterfall. I mean, this is one of those names, kind of like how we saw with PayPal and Square, in which it just nosedives. This really is starting to feel like one of those. I hear people saying that it's going under 300, it's going under 400. I mean, I don't want to believe the storylines, but if I really had to say where you're likely potentially headed towards, I really think that you're likely headed right down into this range right here. So I think you're likely heading down towards the mid 300s, down towards the low 300s. So if I had to really give you an ideal spot in which I would hope for this to hold, is right around this 342, the 341 mark is what I would potentially look to hold, in which that pretty much acts as your prior resistance hit, your prior support back from March 2020 when it actually took off pretty heavily. All right, that was literally, you see, that acted as your basically your support, and it took off and it just ran up towards over that 1,000 mark. I'm inclined to say that it's coming right back down to that level rather quickly. So I would look to rather short the bounces on shop. I wouldn't look to play the upside. Again, that's kind of, no, I hate to say it's similar to Baba in terms of the price action, but I would look to short the bounce, look to short any rip on it, and pretty much take it down towards this mid 300 mark, right? Because otherwise, this is a knife that's going to be very costly if you try to catch it here. All right, there's nothing here that definitively says that you're going to get a bounce at this particular spot that it's sitting at, or even remotely within about $10 to $15 here. And that's why I'm inclined to say that I would favor the downside more. All right. Would I be able to check Square? Let me see if I can take a peep at Square real quick. Oh, this is another knife catch. Um, let's see. Are we close enough to that support? Well, it looks like we actually tried to find a bottom in which we bounced off of. I would hope that we pretty much hold this bottom, but I definitely expect to retest it here at this 82 mark because this also acted as you see prior resistance quite frequently back from October 18th towards July 2019, again in February 2020, and then you pretty much took off in June of 2020. So I would expect this 82 mark to really hold, in which that's going to be a very significant level. And that would be the ideal spot in which you want to load up. I wouldn't say buy here. Wait for that 82 mark to be retested. Once you retested that 82 mark, that'll be where you start to scale in. Look to see if you pretty much get a wick underneath as the volatility in the market continues, and then add under 82. But 82 will be where I start to scale in once it starts to retest. That will be what I would be looking for. All right, and hopefully that kind of helps you there, VJ. All right, well not VJ, Ectonas. All right, hopefully that helps. Other than that, LEA, I have not. Let me see. Is this a penny stock? Oh no, it's not. Lear Corporation. That's what it was. Um, I mean, this chart is actually not that bad compared to what I've seen. I gotta say, I think I've seen worse charts than this one. If I pretty much, and I do have the weekly up, see where we're probably sitting at. Probably get a range in terms of what you're looking at. I think you're coming down right into this box right here. This is the range in which I would pretty much say that you're likely coming down in towards. The reason I say that is because you're looking at prior breakout spot. This is basically what I'm looking at. You broke out here right above this 125 mark rather convincingly, and you pretty much just went straight vertical in towards the end of the mid-June of 2018. So 125 is that ideal spot in which I would expect to get retested. But in terms of adding to your position, you may end up getting down towards that mark of 120, in which that's the low range of what the volatility is going to continue to add towards this. All right, so 120 to 125 is that ideal range in which you're looking for, and that'll be where you want to end up trying to enter your position. So if you're trying to do a scaling type of position, you're looking to start entering at 125, and then any dip under 125 you're adding. Otherwise, if you want to play it safe, you wait for 120 to be tested, and that'll be where you potentially look to enter. All right. The other thing that just caught my attention right now is just noticing this little gap fill. You have a tiny little gap fill here, down here at the bottom, which is sitting at 115. So if you really want to play it safe, try starting at 120 in the bottom of this range, and then your gap fills where you want to be cautious about is at 115. All right. All right, I'm gonna look at those last two tickers and we'll call it a session here, Boeing and JPM, and that'll probably be a wrap for us. Looking at pretty much Boeing here, and this is pretty much, I looked at Boeing a little bit early on today. It did not look very appealing to me right now. I do expect a little bit of a bounce here. It's pretty much, it tried to wick into the gap fill that we have, and it pretty much, the last little candle that we had for this week so far is pretty much defending that gap fill on this weekly candle so far. So I would look to likely get a bounce here. Maybe we get a bounce towards 179. It was pretty much defending rather well. But then I would look to short this off of that 179 mark and take this right into that gap fill. That's pretty much going to be sitting right towards 158 it completes. So rather than trying to play the upside, I would look to short the rips or the bounces, in which case this is going to be a very tough resistance to get over at this 178.80 mark. And that's where you want to look to potentially get into a short on this one. All right. It did defend rather well today. I think the fact that we had so many names down, there really wasn't a reason for Baba to really, for Boeing to go down. It defended that gap fill rather well. It's just that I don't think it's going to be able to defend here, but for so long. And so we'll see a little bit of a bounce rather tomorrow morning towards that 178, 179 mark, and then it'll likely see some selling pressure being continued as SPY rather continues to roll over. All right. But that's pretty much your defined level. Over that 179, then I would say that maybe you're in the clear and you get a further bounce. You can see this stretch up towards 190. Other, I wouldn't say 190, 188. Otherwise, if you can't even get over this 179 mark, it's gonna be tough, and you get right into the gap fill in terms of your defined range, and you come down towards 160, 159. All right. Other one was JPM. I know Banks did pretty well today. Actually, yeah, it did even close green today. So that was pretty solid. You had a nice little, I want to say a little bit of a head and shoulders type action on JPM here. As you see, you pretty much just waterfalled and you retested, nice drop, nice little rebound potential action today. I don't think this is going to necessarily hold, in my opinion. You have that solid gap fill that's pretty much sitting down here at the bottom here, right below 110.35 and completing here at a high of 105. So that's going to be a beautiful gap fill in the making here. The only thing I do think about the banks right now, relatively in a broader perspective, is that since there's so much pressure on the rate hike to be rather more than what what the Fed's pretty much said about the 25 basis points, they're trying to pretty much push for maybe about 50 basis points right now. That pretty much benefits the banks. And so I expect banks to hold up at least until Wednesday, until we hear what the Feds are going to say. So I do expect this bounce to pretty much get a little bit more upside here. I would like to see this pretty much get over this resistance here, over this 133 mark. If we can get over 133, then we can stretch this towards 135 before we hear some kind of news out of the Feds. Otherwise, after Thursday, then I would expect this waterfall type action to pretty much continue, and it's going to pretty much accelerate under this 123.60 mark rather quickly towards testing that gap fill. All right. But if you're trying to jump the gun, I would wait pretty much to see how banks do tomorrow. I think that banks are going to be rather performing pretty well again yet tomorrow. And then the Fed decision on Wednesday will be more so a determining factor in which we'll see a sell across the board on all the banks, um, contingent upon what the Feds really say out. All right. But if the Feds really don't come out saying that they're going to raise the hikes yet again, then that pretty much just gives more ease, and the banks are pretty much going to take it as is, and they're going to sell off because doesn't necessarily benefit them here necessarily. All right, so that's pretty much what I expect from that. Hopefully the levels on the cues that I pretty much went across, hopefully that kind of helps you. But other than that, that kind of wraps up our YouTube live session here today. And hopefully we get some better price action tomorrow. Maybe it's likely going to be a little morning pump followed by a massive sell-off, kind of like today's price action. So be aware of that. This is not a market to pretty much go long. So look to short the rip, short the bounces, rather than trying to buy the dip and sell the rips. All right. So hopefully that kind of helps you guys. But other than that, appreciate you guys joining. Drop a like. I'll see you guys in the morning on live. Otherwise, if I don't see you on live, I'll see you guys here yet again tomorrow. Same time, same place. All right. You guys have a great evening, and I'm out.